Whenever we buy into a particular stock in any sector, we always want to buy the best company. But how do we determine which one is the best? For me, I look at this matrix called the net profit margin. Net profit margin is calculated by taking net profit divided by total revenue. Total revenue is the amount of money that this particular company collects from its customers by selling products and services. After collecting the whole entire sum of money, this money doesn't belong to the company fully because we still got to pay for expenses. Example, salary, rental, tax, and so on. So effectively, any company within the industry can only do two things to increase the net profit margin. The first way is to increase their prices. However, for most companies, if they increase their prices, they will lose customers. Only companies that are strong enough with a strong brand name, with loyal customers base, is able to increase price without losing customers and increase their top line or their revenue. The second way a company can increase their net profit margin is by reducing expenses. To effectively reduce expenses, these companies need to have what we call an economies of scale, meaning to say they are big enough or they are efficient enough to reduce expenses without affecting the quality or the amount of products and services that they are delivering. Where do we find net profit margin and how do we compare it across industry? Let me show you an example using Guru Focus. We can look for the companies that we want to invest. In this case, I'm going to look at Occidental Petroleum, which is a company that Warren Buffett has been investing in. I'm going to click on 30 years financials. Scroll down and under ratios, we can see net margin in percentage. Click on it and it will show you the net profit margin of this company. Occidental Petroleum has a net profit margin of 14.86% as of March 2024. But how does it compare with the other peers? Because every industry is different, the net profit margin must be in comparison with the peers. You can see at this portion, Oxy's net margin percentage is ranked better than 75% of 964 companies in the oil and gas industries, meaning to say it's the top 25 percentile in the industry. Quite a good company. Let's compare this to Exxon. Exxon is also in the oil and gas industry, and we can see here Exxon's net margin is 10.22. It is still ranked better than 64.21%, but we can see Occidental Petroleum is definitely superior in that sense. Do take note that this particular way of comparing is only comparing the current year. We got to look at the consistency over the past 10 years. But for right now, we can see Occidental Petroleum is indeed a strong company within the industry. To learn more about investing, follow this channel and click on the link to download resources to make you a better investor.